Hey, all right. So this is my first video that is strictly for the Solo Fund channel. I want to use this channel to go deep into funds, managing them, growing them. I think that the fund model in general is something that I am a very big fan of because I think at some point you have to become a full-time money management. Like there's really no such thing as pure retirement, right? Because even once you retire, your job then becomes being a good steward and being a manager of your money. And so I think it's just one of those business models that it's great to get started early on to start to learn the business of managing money, which, I learned with my very first fund that, oh, this is totally different. I was good at like doing deals and making money, but then I got into my first fund. It wasn't until I was in it that I realized, oh, this is just a totally different thing. It has very little to do with even buying a business, even if that's the asset class that you're focused on. It's one of the reasons that the very best private equity fund managers have never been entrepreneurs. They have never owned a business. They didn't come from a business ownership background. You look at the Steve Schwarzmans, you look at the three partners of KKR. These are the best and biggest. And these are people that come from investment banking. And so private equity has a lot more to do with investment banking than it does anything at all to do with buying and selling businesses, which a lot of people, it's one of those things that even when we're going through PEFI, the private equity fund incubator, when I'm taking people through that process, it's like one of the most difficult things to convince them of. So on this video, though, I do think that's an important thing to understand. But I want to spend time talking about what's going on in the market right now, a big difference and a big opportunity that exists for micro private equity and solo fund managers. And we'll get into some of the impacts that AI is having. So number one, what we're seeing in the market in general is, one segment of private equity is venture capital firms and that kind of thing. And then the other is the acquisitions focused funds. And on both parts of those, there's a bigger focus than ever to try to do smaller deals. On the venture capital part, it's just the realization that the best deals of the future are going to be AI focused. And if they're AI focused, they don't need a lot of people. The last business that needs a lot of people are kind of the chat GPT and kind of building the foundation of AI. And then after that, everybody else that uses AI is going to be it's not going to cost a lot of money. And so now there are these large funds that basically have too much money, which sounds crazy, but it's literally that they have too much money. So they don't need that much money to invest in the very best deals. To give you an example, you have a business like Midjourney. It's got like 10, 11 people that run that business. That's going to be $1 billion business. It's less than $1 million to start. And so because there are, and this is what I'm always telling you guys about, what's great about starting a fund is these funds in private equity have raised a ton of capital because there is a lot of interest from the investors. But I think a lot of them will find themselves in the same position as I did in my very first fund, where it's like, all right, basically I had in that first fund, I had more capital than I needed. And that's one of the things that transitioned me to really focus on, the real opportunity is in the micro funds. Now, I think, that's one part of it, but then in the acquisition private equity aspect, I think you have that same thing with just the growth and the ROI in deals. So what we're seeing right now is, sure, a larger fund who's doing acquisition PE, those funds can acquire a larger business, decrease their cost, et cetera, by getting rid of folks and replacing it with AI. But even that return, let's say you take a business that was a 20% margin and now you double it to a 40% margin. So you did a 100% increase. When you compare that to being able to be in a small deal that now can 10x, 3 years in a row, like a small team, like, the Midjourney example that I'm giving. And then there's just so many, there are other ones. Photo AI is another, just one person essentially who runs that business. And so it's so interesting because I think the solo kind of businesses also give rise to the solo funds. And so, part of it is using AI and all the tools, et cetera, to be able to grow your fund. But then a lot of the deals that you're doing, you're also, we're at this inflection point where you can almost get ahead of competitors and really cut costs and be at a significant advantage if you know how to leverage AI. So I think that part is really interesting. Now, it's always been the case for the smaller funds, they are in a position to be able to do deals and get a much higher ROI than the private equity funds, the larger funds. But I think now we're going to see that widen even more. But outside of that, I did the video on the Ace Chapman channel yesterday talking about how we're using AI to essentially, sell businesses and in some cases buy businesses. So you can check out that video. But I want to talk a little bit about on the fund side, how you can use AI as well. And some of these kind of overlap. So if you look at due diligence, like I mentioned in the Ace Chapman video, AI can analyze a ton of information, more data than our brains could ever consciously be aware of. Now, subconscious is different, but we don't have control of it, so it doesn't matter. So it can just process way more information. And a lot of times it can bring up things that you just may have overlooked. Now, it's not to say that that's going to tell you if it's a good deal or not. You've got to, number one, know what data to input and then know how to read the data to make a decision. But the exciting thing is you may have overlooked something, and that is something that you can leverage. The next thing is generating detailed reports. One of the more difficult things with a solo fund or a micro fund is that, when you're out there trying to do the deal and then the investor's like, oh, I want to get this report and I want to see how this is working and that kind of thing. Now, you may have a lot of knowledge, but AI can help to deliver that knowledge to the investors in a more ingestible format and analyze the data in the business from a lot of different perspectives. And those are things where it's like, a lot of times that could be a deep conversation with an investor, but all of a sudden you're able to do that very, very easily. Next, I think it's going to lead to being able to get more deals done. Because you can analyze and process the data so much faster, it's going to allow you to close a lot more deals. And at the end of the day, again, if you're somebody who is doing all of the management yourself or have a small team, each deal has a big impact on how much money you're able to earn as the GP. Now, when it comes to sourcing deals, I love just having a ton of sources for deals. I've worked on that for 20 years. I tell you, I look at probably through my email alone, I get about 300 emails a month because it's about 10 a day. So I think, a big part of being good at micro private equity is being able to source deals. And so if your fund has all those deals, that creates a ton of power for you to choose the very best deals. And so with this, I think getting creative about the deal sourcing is really interesting. I kind of went into detail on that on the HR video, so I won't talk a ton about it. But what I like to do is every deal we're doing, I'm trying to find the strategic deals that are going to automatically grow both businesses in that next acquisition. And I've been playing with AI just to kind of creatively think outside the box of the things that I might assume. There are going to be things that it doesn't come up with, but it's going to be a lot of things that it may kind of lead to some other potential targets, which increases your deal flow and your deal sourcing. And then right from the jump, being able to get some insight into market and into different markets and different industries that are in those markets. It's one of those things where I think people have a very tough time trying to figure out what deals should I be focused on right now. And that's even for people in our acquisition holding company program. When I'm talking to people, it's just like, okay, like I am kind of open, but there's a lot of times just no right answer. There's a lot of different factors. And one of the things that AI can do is help to take those factors into consideration, but also maybe provide some insight into where different markets may be going. So overall, the big point here is, I think, with the efficiency and the tools that we're going to be able to use, being small and nimble is creating the greatest opportunities ever. And as these larger funds have to tell people like, hey, like we really can't put this money to use. There's more capital sitting on more cash and dry powder sitting on the balance sheet of private equity funds and venture capital funds than ever before. And there's fewer investments being made than ever before, and in smaller amounts. And so you combine those three things. If you have more money than ever, so all of them have more money, then you have fewer deals, and you have smaller amounts needing to be spent in each deal. That's a bunch of capital that eventually has to be returned. I talked before about having a fund where we basically had to return $6 million in a fund because we just didn't spend it. And so that's going to be the case in a lot of these deals, or they just will have subpar returns. And in either case, that's great for us. There's a lot of capital looking for a home, and we can generate really, really great returns because we can do deals at a 3 multiple, which is just the average deal generating a 33% return, as opposed to having to do things at a 10 cap where the max they're generating is a 10%. And that difference alone is one of the things that makes being a micro fund or solo fund very, very powerful. I do want this channel to be interactive. Be sure to put any questions below, and I'll come to those later. And hopefully y'all are out there meeting investors, doing deals, and raising funds. If you're not in the Patreon, check it out, patreon.com/Ace Chapman. Thank you so much for popping in.